What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief, the video that I post daily, Monday through Friday, 5 days a week. We look at the price action of the markets. We look at the breadth of the market. We look at sentiment of the market. We look at multiple time frames. We just dive in to everything that we can dive into to really get a good idea as to where the market might be headed next. In today's video, I got some new charts to show you, so I'm pretty excited about that. Yeah, and some quick housekeeping before we get into it. I want to just say thanks to all the kind comments flooding into the channel. Okay, also, there's been a lot of spam comments coming in. Scammers and spammers. If you see a comment by me that's asking for Bitcoin or WhatsApp, or let alone anybody saying that my broker, Mr. Blah Blah Blah, is the best, just ignore that. Most people know that. I think people are smart enough to understand that, but don't ever trust that. All right? Yeah. But thanks for all the kind comments. There's a lot more than just spammers on the channel. We got real people here. Let's hop into today's show. All right, everybody. Like I said, we got a lot to cover. We're going to start with the SP 500 and then kind of work through all of this. We're going to be looking at the daily and the 30-minute time frame. Let's go ahead and hop into the daily time frame. We'll follow up a little bit on what we talked about yesterday. Well, we broke out, right, of this ascending triangle, symmetrical triangle, if you drew it a little bit differently. And then yesterday we had this bearish engulfing type candle. What did we say about this? Well, it was pretty bearish. It's an outside trading day. It's a bearish engulfing. It's a reversal type pattern. We closed below the 5 EMA, okay? But what did we say? And this is going to be the common theme throughout the video. We said we need confirmation. Today, we technically got some confirmation. We held below the 5 EMA, but realized what took place. Well, we came back and tested the exact support that we say we're going to test, and then boom, we started bouncing higher from that level. So clearly, people are buying up at these specific levels. Not only do we have this as support, we have the 20 period and this gap. So a lot of confluence for support here. If we start breaking down that level, then I think that it's very simple to start running down to the lower range of the Bollinger Band and this next gap, which is 3550 level, okay? However, we got to see how tomorrow's price action or even the aftermarket session works, because right now we found some strength and then we try to get back above the 5 EMA. Notice the 5 EMA today, it acted as resistance. That hasn't happened for quite some time, seeing the 5 EMA tag as resistance. It's really been just tagging as support. So what can we expect? Well, you know, with what just happened with the ECB buying $500 billion of, you know, bonds, bond buying program for $500 billion, and we have the Fed coming up next week, and then we have the VIX Friday, you know, it's tomorrow. Sometimes the VIX gets crushed to the downside. Maybe we might continue to just bounce from this level, but we're just going to have to pay very close attention. Let's dive in a little bit deeper into the lower time frames. This is the 30-minute time frame. We talked about the positive divergence and a potential bounce. Well, we did get a little bit of a bounce, but not that much. Right here is a bear flag that we got to watch out for. When it came down to this lower portion, I posted on Twitter, said watch for the bear flag. Almost immediately after, we get news around the aid for the country, stimulus aid. And then immediately we started seeing a bid catch higher. But just mind you, we did not get above 3680, which has been a solid level of resistance. So this bounce right here was a failed bounce to make a new high. And this one right here still hasn't broke above 3680. If we start breaking it above, we got to keep an eye on the previous all-time high, because if we fail to make that high, that could be a potential trend reversal where we've been making higher highs, but now we're starting to make lower lows. Sorry, lower highs. We also have to make lower lows here in the near future. Still in this channel overall, though. If you haven't done so already, smash that like button. If I can get to 2,500 likes, I was actually originally going to do 3,000. 2,500 likes, I will go ahead and just send out the links to every single one of my indicator charts. I'll just post it on my website. I plan to anyway, but I figured if I get like 2,500 little thumbs up on this video, I guess that'll make me do it a little bit quicker because I'm on and off on that website. So smash that like button. Let's go to the Dow Jones. Dow Jones. Now this is where it gets interesting. This is what I'm excited to talk about. All right. First off, we're still coiling in with this rising wedge. This trend line right here, respected, 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 respected. Respected is being rejected. But this support line is also being supported. It's also bouncing, 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 bouncing. This right here is what we talked about in a couple of videos ago. It's coiling up tighter and tighter. Yesterday we closed basically on the 5 EMA. Today we closed basically on the 5 EMA. We gave up the 30,000, but what, by 80 cents? A little bit less, 29,999. So we're still floating around the 30,000 range, just coiling up in this pattern. Yes, the 5 EMA kind of is rounding off and kind of going lower, but the RSI is still trending higher. Yeah, the MACD crossed over, so that could be bearish, but we haven't broke down, and we have the 20 period moving average right below us too. So we have this support and that support. But now what I find very interesting is if you just zoom out, okay? Look at this. This is something that maybe I've shown this before, I don't know. But this upper trend line that's being respected on this rising wedge, look at rejected here, it broke through, came back, back tested it, got rejected there, and then acted as support here in June of 2019, August, September, October. So this is a valid trend line that we should be monitoring and just watching. And clearly you can see the price action struggling right here. And then also, not to mention, we have the RSI from this point to this point. You can draw a line down that's a negative divergence. Interesting times. 30-minute time frame. Rising wedge, right? We're at the very kind of lower level here, trending below the 50 on the RSI. So if we start getting above that, maybe we start ping-ponging back around. Maybe we just go back up to 30,200. We have to see a break one way or another, and it's coiling up tighter and tighter, so it's getting ready to make a bigger move. Now, what I find interesting is this chart. I've shown this before, so I'm not going to spend too much time here, but just look at the price action from 1989 to this 2020. And yeah, this is on the weekly time frame, so it took a lot longer to recover from the 87 crash than it did in the COVID crash right here in 2020. But that's also probably because just the amount of monetary policy or money supply being just influxed into the economy here. So we had record spending went from 4 trillion to 6.2 or 7 trillion so a 55% increase in less than a year. All right. So yeah, I would imagine. But what I find so crazy about this, the price action is very similar. And price action is market psychology, right? It's what's the market doing. So what I noticed is, yeah, when we crashed down, we reached the all-time high, okay, over here. So you can see the price action struggled to make an all-time high, got rejected once, came back up, rejected twice. Notice they're both at the upper range of the Bollinger Band when they were doing that. And then we kind of blew off, making an all-time high, blew off, making an all-time high. Then we started struggling around the upper Bollinger Band like you see right here. Maybe this is telling. Or maybe it's nothing and I'm just trying to put something together. But nonetheless, pretty crazy in my opinion. Now, another thing that I want to point out, and by the way, this also matches 1987, but I don't got that chart up right now. First off, I wanted to just show this in candlestick form. I usually show it while everything's in area, which is all shaded in, but this is the Dow Jones Composite up top, and the Dow Jones Composite is made up of these three right here, transports, utilities, and industrials, okay? These can't diverge for too long. They're all supposed to move in unison. The utilities has continued to get beat down. We might find support in this area. You can see it was resistance here, support there, and now we're coming back into 850 right here. So if we continue to break down and these markets squeeze higher, the industrials, the transports, that's going to be a big red flag. But if we zoom in on the thumbnail right here, you can see, yeah, we're pulling down into support, bearish context. Maybe we consolidate sideways, make a bear flag. But then if you look at the composite, it's squeezing higher and higher, no consolidation. It's getting tighter and tighter. And these candles that are forming are pretty bearish looking for the weekly time frame. So it's going to, it really depends on how we close tomorrow, what this is going to end up looking like. And then another thing is the value line index has not made, or it's basically making an all-time high, recovering from the March crash or February crash. So it's not quite fully an all-time high. It might be. I'd have to really look at the price, but it's floating around there. But there's a divergence between the value line and in the industrials. Not by much, but you can see the industrials clearly cleared the all-time high and was pushing higher. The value line, these go hand in hand. You should see them move in unison. So when they diverge for quite some time, you have to take note of that. Now I want to show you something even bigger. This is the Dow Jones Global Index. All right, this is all around the world here. This is an important index to watch. And there's a couple things I want to point out. This is on the monthly time frame, so this is some big picture stuff. All right. First off, we have the PPO down here. This is just an indicator that I like to use. And I'm using the settings 1,10 if you want to do this yourself. All right, so you use PPO indicator, you do 1,10, and I just want to show you just how extended this recent move is. It's bonkers, and it happens very rarely throughout history. You can see, the last time it happened was here in 2018. And then before that, we had a couple other times here. And then before that was in the 90s. So it's very far and few between that we get these huge moves and overextensions. Now, on the zoom in thumbnail right here, what I want to show you is we're trading above the upper Bollinger Band in the global index, okay, after a solid straight vertical move to the upside. So that to me is already overextended. It's very hard to say that that's not overextended. Then you look at the RSI. Now, RSI is a negative divergence that's been building, not confirmed yet, but it's been building since 2018. So it's a long-term thing, all right? Then, if you just look at the time that this number reached above 10, right here on the indicator, what happened during those times? Well, right here, down 21, let's just call it 21%. And where did it tag? It tagged the upper channel on this little channel thing right here, and I'll talk about this in a second. And then right here, the last time, 27.3% down. Okay, when we reach this level, we hit this top trend line right here. The time before that, 11%. The time before that, 10%, 51%, 21% down, 10% down. So huge drops after those moments. Now, what am I pointing out here? So first off, long-term trend line, all right, from 99, 2000-ish right here to the 2007, 2008 peak. We got, so resistance, 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 and then we blew off over the top of this. Now, is this a solid move to start, turning this trend line into support? Maybe, but it's doing it on a negative divergence and it's overextended. All right? So me personally, I would look at this and say, be careful here. But that's not to say it can't go higher. I'm just saying be careful here. Then another thing that I want to point out is this bull channel. This bull channel has been acting as resistance, support, resistance, support, resistance, support, resistance, flash crash, immediately came back, tagged it, and now we're coming back up to potentially act as resistance again. So can this potentially squeeze higher? Well, if it squeezes higher, it's going to do so still on a negative divergence and extremely overextended. So you tell me, is right now the best time to just start loading up, going long? Maybe. But in my personal experience, and I'm not trying to talk anybody out of that, I mean, it's just pretty crazy looking to me. Just crazy. Crazy. Let's talk about the Russell 2000. Russell 2000. I read you out this rising wedge. Look at, what did we say? Don't get too excited about this, down day because the 5 EMA held as support. What took place today? Well, we gapped down and then ramped straight up, closing on pretty much the high for the day, recapturing the 5 EMA so that small caps continue to get bought on the dips. What I find interesting is we gapped up the other day and then we had weakness. But then today we gapped down, which would indicate weakness, but then we got bought up. Now, when we did gap down, what I will say, what I liked about today's little trade that I placed is I was talking about, actually, you know what, I'll talk about it on the 30-minute time frame. First, let's look at the 2-hour time frame. 2-hour time frame broke down and now we're starting to rise pretty significantly high. You can see sharp move to the downside, sharp move back up to the upside. Now, what's interesting here, another potential opportunity, we're riding, it's still a rising wedge. This is a bearish structure. We have all these gaps below us. But if we make an all-time high, it's going to do so on a negative divergence. And if it makes that on a negative divergence, that's how market tops are made right here. Market tops are made like that, where you start seeing weakness or divergences or structures like this. So, let's be careful. That doesn't mean it's a certain thing. This could go higher and we could break the negative divergence and RSI can get to 90. I doubt it. That'd be crazy, but, I doubt it. All right, so what was I going to say? Here on the 30-minute time frame, we talked right here, okay? We posted on Twitter, said, yeah, that looks like a good head short. We gapped up, scared a lot of people, but then we crushed down to the downside. I scaled out of the position right here, all right? And then it moved up a little bit higher. Today, I only had one more thing to just basically scale out of. On the gap down today, from what I've noticed, the dips have been bought, right? So on the gap down today, I scaled out of that remainder position, and then we started ramping higher. Now I plan to again, head short if we start seeing a negative divergence take place. I would love to see a big gap up, negative divergence, and I would probably sell right into that quote unquote strength, but yet potential weakness. This would just be a good position. All right, let's move on to the Nasdaq. Nasdaq 100, talk about a nail, just like hit the pin on the nail, what's the saying? I don't know. But basically what we said was we broke through this trend line, had a bearish day. We need more confirmation. This one down day wiped out six days of progress moving to the upside. All right, pretty insane. And what's so interesting is the 5 EMA here acted as resistance, at least for now, right? Doesn't typically do that for long, but it did right here. And where did we bounce from? The exact support that we set up yesterday. Technical analysis doesn't work during these times, right? No, it came down perfectly, bounced from that level, pushing, trying to just thrust right through the 5 EMA, but got a little bit rejected. Maybe this move down still continues. If it continues to the downside, and look at the 20 period moving average. We talked about that too. 20 period moving average up into the 12,200 that act as support. If we start breaking down, I would start looking at the lower Bollinger Band and or this trend line right here that we broke out of. So that'd probably put us right around, just under 12,000 would be a potential good opportunity to buy. That would close in a lot of these gaps. If we start heading lower, you got to make sure you have stop losses. But if we do rip lower and close some of these gaps, that would even present a better opportunity to go long if you're planning on buying the dips. But like I said, man, the markets are overextended, and I proved that on the global index. But we'll talk more about everything in the conclusion section. Nasdaq, okay, we broke down the rising wedge, very just structurally sound breakdown, technically correct. We called out the positive divergence. What did we see? A bounce, failed bounce, obviously to make that high, and then we started heading lower, and then we started going basically sideways. This structure right here, it's a bear flag. Yeah, we gapped down. What happened today? We gapped down, we moved a little bit lower. What did that do? Well, we closed a gap. The markets do that. We still have a lot of gaps below us though, all right? Look at the, this is just the 30-minute time frame. The Bollinger Bands are contracting. I wouldn't put too much weight on that. I could probably just remove them. But we did get above that, basically sitting on the 20-period moving average. So this move might continue. If we break above the 2450, that would confirm a higher high to this previous high. So that's bullish. So we might squeeze higher. But if we fail to get an all-time high, that's not the greatest, because that's how you start turning trends. You have to put in lower highs and lower lows. Simple. So simple, right? And then we got the semiconductors here, the SOX. You can look at the SOXX if you want. It was just getting super frothy. We kept on moving higher and higher. I was interested in shorting this as well. So I even have some shorts on for AMATs, which is one of that just been ripping higher and higher, but it was such a small hedge, and I can still, I'm down on the position, maybe a couple $100. Nothing crazy. So what's going on here? Well, the semiconductors make up a big portion of the Nasdaq. We saw a lot of weakness. We closed below the 5 EMA. The 5 EMA got retested, but it held. Now are we going to continue to make another all-time high on a potential negative divergence? And then that's going to show some market weakness? And that could be potentially topping pattern right there. It's possible. We got to watch out for it. So keep an eye out. Or we might just continue to sink down lower. My guess is the dips are going to continue to get bought until the market just has a massive rug pull. Like I said, Fridays are typically days that the VIX gets crushed to the downside, which pushes up the indices or the SP500. So if the whole market kind of just recovers, that could be our negative divergence day there, and who knows what's going to happen when the Fed talks next week. But I can only imagine it's going to have to do with more money, more stimulus. So we'll see. Now it's time to get into the indicator section. Let's talk about the VIX. The VIX broke out of the rising wedge. We're above the 20-period moving average. The RSI started curling over. We're still below 50. If we start getting above 50, we might start seeing this thing push higher. Remember, I was saying 2750 would be that first target area. Yeah, I could get there. We'll see. Maybe even this area right here, about 25. Maybe we'll just get a quick push to the upside. Now, VIX typically, like I said, gets crushed on Fridays. So if we get crushed, how far low can we go? But what if we don't? That'd be interesting too. So I don't know, something to watch out for. We still have this gap below us as well. As far as the CPC, our little warning indicator, this is a CPC, the total put to call ratio, tells the sentiment of the market, smooth over a 10-period moving average, lagging indicator, but it helps us, trigger warnings, sell signals. so forth. We came down, double bottom. We saw this little bounce from this little level right here. Last time it was down at this level and started curling up. That was September, and we started really ramping down lower. Yeah, we have this little down tick today. Who knows? Maybe this is just going to be choppy back and forth, potentially even shoot lower. Okay, the last time it was at these levels, I think I've already mentioned this. It was March 7th, okay, 2005. The S&P was at 1230. Okay, by April 20th, when it was at these low levels, the S&P dropped to 1138, which is a almost 8% drop. Okay, if we get an 8 to 10% drop, that's going to fill a lot of the gaps in the S&P 500 to kind of make up for this recent melt up, to say the least. Then we got the Pring Bottom Fisher. Pring Bottom Fisher is used to find market bottoms. Okay, I like to use it to find a market bottom. So when it comes down below this 10 level, you'll see the blue line cross over the green like that. And then that's that lagging indicator to tell us, hey, that's a potential move to the upside. And what do you know? We had an inverse head and shoulder here, and then boom, we squeezed to the upside. Sometimes, and same right here, boom, crossed above, boom, we moved higher and higher. Sometimes when it crosses like this, where the blue line crosses under the 10-period moving average, you can use that somewhat as a sell signal. I personally don't like it that much because it's not nearly as accurate as finding a bottom. But it's still worth mentioning because sometimes it is actually pretty spot on. So we did cross over here in early December. We started what? Drifting a little bit higher, but now we're starting to see some weakness. So maybe this continues to sink lower. Maybe that was a little bit of a warning sign. Something to note. It's nothing to hang your hat on and say, that's the end all be all, but market's complacent. Clearly, we're at 0.4 on the monthly. We've never had a month close this low before in history. We're looking back all the way to 2004. Every time that it taps these low levels, what happens? Well, we typically get a mass reversal on this CPCE. Sorry, not CPC. CPCE is the equity side of the sentiment indicator, put to call ratio. We get little pullbacks. Boom. Well, that was a big one. Boom, boom. And maybe we get a bigger pullback here. Crazy. It's just basically telling us that everyone's bullish right now. What else is telling us everyone's bullish? The NIM exposure. What are asset managers doing? What are they saying? Well, they're jammed up. We just went even a little bit higher. We're just max bullish. Then you got the right X right below it. Okay, gosh darn, it's never this bullish. I mean, it is sometimes, but holy moly, this just shows me when you have this level of a low reading, and by the way, the higher these go, so it trends higher, that means the more bullish it is. And these things are jammed up max bullish right now. So sentiment is extremely bullish, which from a contrarian standpoint, that means, hey, let's probably pump the brakes here. And then we have the AAII survey for both the bulls and the bears, and then we have the ratio below us. Helps us find sentiment, also a lagging indicator. Mostly everything is lagging. Okay, we look at price action and volume if you want just more clarity. But the overall picture helps us understand what's going on, because last time this happened in 2018, we had a negative divergence, boom, we saw that downside move. Negative divergence, we're still moving up, okay? Maybe this is going to confirm here soon, but it's something to note. Then we have the Nasdaq new high-low index. We've been just max, just pumping. But then all of a sudden, check this move. Cut in half. Boom, down to the downside. What did we say? Well, this was a negative divergence here. We met an all-time high, then we sunk, and then we made an all-time high even higher, but on a lower reading on the index. What if that happens here too? Maybe it might not. Maybe we just go full red and start heading lower. Maybe it drops a little bit. Maybe we continue to go higher and it doesn't reach these levels. That could be a negative divergence. Market tops or bear markets start with that type of weakness. Okay? Doesn't mean it's going to happen. Okay? We don't. And by the way, just a note on that when I say we don't know what's going to happen, anybody that talks in terms of certainty, don't even bother believing, because people don't know. You do not know. These help us analyze what could potentially happen, and it helps us develop strategies to trade or to invest, when to buy, when to sell, and you stick to those strategies. Okay? And what are my technical indicators, my signal charts? What is breadth? What is sentiment telling me? Well, from a contrarian standpoint, it's telling me that everyone's way maxed out, way too bullish. Everything is just jammed up to the ceiling. So yeah, I'm pumping the brakes. Other people might read it as, yeah, it's because everything is so perfect right now. I don't believe it. I mean, I look outside my window and it looks a lot different than what the market is telling me. All right, and then we have the, I ramble on. Nasdaq, this is the percent of stocks above the 200 period moving average in the Nasdaq 100. Jammed up, 88. It's a high level, high reading. Last time I'd done that, we get dropbacks. Same type of indicator here. 90.38 of the stocks in the SP 500, they're above the 200 period moving average. A lot of people say, yeah, there's just excellent breadth in the market. And that's true. But look at the move up there to that, okay? Yeah, when we had a crash here, boom, we had a very similar move, and then it held those levels. But mind you, when we started crossing below, we had a 7% pullback, a 16% pullback, a 20% pullback, 6%, 8%, 9%, 6%. All right? So be careful. Here's the fast stochastic on the summation index, jammed up all the way to the top. This can hold for weeks though. So, you know, just note that. When it's like this high, it's not the greatest time to go long. Just be honest. You want to look for pullbacks. Here's the night high low, jammed up, 98.42. Get out of here. Yeah, these sometimes can hold for a long period of time, but that's a big move to the upside. When it gets these levels, you can see some rug pulls. Doesn't mean that's going to happen, but you can see it. You got to be prepared for it. Couple things that haven't really got overextended is the BP SPX and the BP NDX. However, they did create negative divergences. So we saw the market continue to move higher with weakness. So something to note, that's the BP SPX and we have the BP NDX. Really quick, if you don't know what these are, this is basically telling us the percent of stocks in the index that are on buy signals based on those point and figure charts. If you don't know what that is, they look like tic-tac-toe boards. That's all you need to know. Unless if you want to learn more, then you can obviously learn more. Let's go into commodities. What do I want to talk about first? Let's talk about the CRB. Okay, we said this is potentially a bull flag. But what took place today? Well, like I said, the dollar sunk today pretty much immediately on the news out from the ECB. Okay, so the dollar dropped. What happened with commodities? Boom, moved to the upside. That's typical because they typically move inverse of one another. Now, this could be potentially a little fake out just because of that news, or like I said, it could be potentially a bull flag when we see it moving higher. Another thing that I noted was a couple times that it traded a couple days below the 5 EMA, we had a big drop. So right here we did it and it was minus 6.4%. That theory, it's not plausible anymore, but I figured I'd just keep it up. We traded a couple days below, but it was kind of iffy, and then we just jammed up higher. So, oh gosh, I always do that. So we'll see here soon what happens. We have that long upper wick. We tagged the upper Bollinger Band, and we're above the 5 EMA. So this is so far so good if the dollar keeps going down. But we'll get into the dollar here very soon. Now let's look at gold. Gold looked very funky up in this range. Then we saw the pullback. Now we see it kind of consolidating within this just zone that I said was a good area to buy. We'll see here what takes place. There's a couple things that can happen, and unfortunately, there's a big spread, and we have to be patient here. One, if we start cracking below 1780, 1775, then yeah, we can head lower, okay? If we start breaking above 1960, that would confirm a higher high from this previous bounce point. So that would be bullish, okay? So it's quite a big spread here, but first things first, we need to take out this high, which was 1880. So we just came in, got rejected. We need to hold above this trend line and break above this trend line. So the gold has a lot of work to do. And mind you, yeah, overall context, you zoom out, it's bullish. It's above the 200 period moving average, even though, it came down once, but we bounced right above it. But in the intermediate term, we had the 50 period sloping down, coming into the 200. That can be a death cross, whatever you want to call it. And then we have it just kind of like I said, just drifting lower and lower, putting in lower highs and lower lows. RSI is still below 50. It's not giving us that much strength. It'd be interesting. Maybe if we make a low down to 1760 and it scares everybody, but we have a positive divergence there. So we can look out for that. We'll keep an eye out. I typically do. Silver, not much going on. Nothing happened. It was a doji candle. That's indecision. Do we want to continue to move higher? Do we want to move lower? If we get below 2350, I don't see why we can't come down to this zone right here. It'd be simple. Be a simple, just quick little snap to the move. If we start breaking below that, I'd start looking at the 200 period moving average for an area of support. Let's go to the dollar. The dollar, down day, could be because of the news. All right, so I'm not going to get too worked up about this one yet. If we start closing below 90.5 though, we can see some more weakness in the dollar. However, even if we start getting below that level, it'll be a positive divergence. which is a bullish sign. That means we're making a new low, but we're seeing more strength come in. Interesting. So we're going to have to monitor that. Then, not to mention on the weekly time frame, we have falling wedges here and here. When we broke out of it here at this very similar area, we started ramping up. I mean, it took a very long time, a couple of years, but mind you, we got a lot higher. Now what are we doing? Well, we're at the lower trend line right here. We're on a positive divergence currently on the RSI and currently a positive divergence on the MACD. So we're seeing strength on a lower low. Well, maybe we start breaking up to the upside. It's possible. We'll just have to watch to see if it happens. And not to mention we're pulling into an area of previous support. Now with what's going on, I would think that the dollar would get completely obliterated. But, you know, it's anybody's guess right now. I mean, there's all kinds of theories out there, right? Brent Johnson, if you want to read his theory where he sees it as the dollar spiking significantly higher, he calls it the dollar milkshake theory. I would highly recommend reviewing that, looking at it, understanding it, not trying to pick it apart, but really trying to understand his point of view. You know, and then look from a different perspective. You can look at Peter Schiff or any other, you know, big economist that's saying the dollar is going to get completely obliterated. Instead of trying to pick it all apart, try to understand their points. Because by doing so, it's only going to make you smarter, right? What do we say? Coin has three sides. Well, we don't say it. I don't say it. Robert Kiyosaki says it. Coin has three sides: heads, tails, and the edge. You want to stand on the edge and you want to look at both heads and tails from the edge. That makes you smarter, understanding both sides. Once you're biased, you lose sight of other things. Let's look at bonds. The bonds, like I said, we're still drifting lower in bonds. Yeah, we had a little bit of an update, but overall, and this is the TLH, you can look at other ones. This is the 10, 20-year Treasury ETF. Lower highs, lower lows. Maybe this breaks out to the upside and pushes yields lower. Or maybe the opposite happens. Maybe we keep ping-ponging around this channel and head lower and lower. When you take a look at yields drifted a little bit lower today. This could all do around, what's the big bond market doing with all the news coming in? So, we have all kinds of news that comes in. And the bond market is so gigantic, it prices in what could potentially happen. So we saw a little bit of a down, oh my gosh, I always do that. We saw a little bit of a down move today, but mind the trend. 10-year right here, higher lows. Got the 30-year, still higher lows. Trend is up since August. Spreads, the 10 minus 2, trend is up. 30 minus 5, trend is up. Things are still trending up. What does that mean? Pricing in future growth, future inflation. I always say, an easy way to think about this is first off, how high can yields go to potentially start hurting, regular American people, right? Because the higher the yield goes, it gets more expensive to borrow money. And as you can see, with rates smashed to nothing, it doesn't encourage savings. This is why when people say savers are losers, it's because you save dollars and everything gets more expensive around you. So when things are getting more expensive and you just have dollars in a bank account, it's wiping away it's an invisible tax. It's inflation. And I posted on Twitter today, this whole inflation thing. Is it inflation? Is it deflation? It's actually technically deflationary because of the velocity and this. There's so many different debates, but this is how I see it, okay? What matters to me? What matters to you? Is things getting more expensive to you? If they are, well then guess what? There's inflation. That's the easy put. It's when there's more money chasing less goods or potentially the same amount of goods. Things get typically more expensive. Well, what can you do? Like my wife's a hairstylist, just to give you an example, if she has an incredible amount of clients, which she does, what does she have to do in order to maybe start dialing back a little bit? She's going to have to increase prices. When things get expensive around her, what is she going to have to do? When different things become more expensive, she's going to have to increase her service costs. That's what happens. What are we seeing in the housing industry? Housing, now I'm really ranting, but housing is getting so darn expensive. Why is it getting expensive? It's because it's easier to afford the monthly payments, which means nothing. But what does that happen to the savers? Oh yeah, we saved a down payment for 20%. Imagine that. Okay, I'll just give you my example right now, okay? I'm lucky enough to be able to own a home right now, okay? I own a home, so yeah, the equity's going up, big deal. But I only own one, right? So really, if I were to sell it, I'd have to go buy a more expensive home of less quality. That's just what happens, okay? The prices go up, but the quality goes down. So this is what happened. In the last 2 years, the house is up $50,000. Like $40,000. No, probably $50,000. That's $20,000 to $25,000 a year, okay? What normal average American can save that much money, not to mention the crazy unemployment that's going on right now? So if anybody said, oh yeah, in the next 2 years, and a couple of years ago, we're going to save, $20,000 for a down payment on a home, or $40,000 or whatever the case is, and they save that money, and then they're ready to buy a home, the home is already costing them that much more. So they saved all that money, and now the house costs that much more. You see what I'm saying? It bugs me. It bugs me. It bugs me. I would much rather have lower priced homes and higher interest rates. Why? One, because our savings, it would encourage people to save money and not to consume so much and buy so many things that they can't otherwise afford. Now I'm really ranting on. Let's get into the conclusion section. That was pretty much the conclusion overall. I just want to close off on this chart. Hey, pay attention. This is actual data, right? This is actual price action. This is how the market is moving. So when the market gets overextended, like it is right now, we can look through history. What has happened? Well, we've seen big dips, negative divergence, very extended here. What is the differential factor that is going on right now? Well, we've never seen this type of monetary policy ever in history. So you can take the gamble and say, hey, technicals don't matter. This market is not going to pull back. The gaps will never get filled, and the market will continue to move in a vertical line. I just have trouble believing that, and I could be super wrong. But that's okay, because even if I'm super wrong, I'm not losing anything. But if I am going all in right here, if I'm pushing higher and higher, and I am wrong, I'd be losing a lot. So I need to be very, very careful. And I'm not saying you need to. I'm not recommending that. I'm not doing any sort of financial advice. But what I am doing for myself is I am in defense mode. When things look too good, they typically are. But what do I know? What do I know? Yeah. All right, everybody. That's all I got for you on today's Market Brief. See you later.